Do you want to know how the current loan balance inside my policy is affecting the growth inside my policy? My name is Carmen.
And I'm Darius.
For the best infinite banking and financial advice, subscribe to our YouTube channel and hit the notifications bell to be notified when we post new videos.
If you've been following our channel, you know that we speak a lot on the concept of infinite banking and cash value life insurance. And the loans from our whole life insurance policies we've used to take care of credit cards, vacation, business expenses, and even pay off our rent for the year. Now, what you haven't seen is us show you exactly how those loans have affected the growth inside of our policy, which we're going to show you on this video today.
Now, keep in mind the policy that we're going to show you is one of my personal policies, and it is 2 years old. So hang tight, we're going to flip to our screen so that you can see the numerical breakdown of my illustration and also the existing loan balance that I have on this policy. All right, Wealth Nation, check this out. This is one of my personal policies, and what I've done is shown you the performance of the first 5 years. So this was my initial illustration of a policy that is $12,200. In the first year, I put an additional $2,000 to dump in. So just to clear up the confusion, this is a $12,274 policy, but in the very first year, I put in an additional $2,000. And with the table in front of you, you'll notice there's a guaranteed side and then there's a non-guaranteed side. So the guaranteed side is that guaranteed 4% compounded interest rate that this insurance company is paying me. The non-guaranteed side includes something called the dividend. So the dividend is the return of premium, because since we're working with mutual insurance companies, policy holders pay their premium. Whatever is left over at the end of the year, once the insurance company pays their overhead, is returned back to the policy owners. So if you see in this column, this is just reporting the dividend projections that I will receive. Now, the purpose of this video is for me to illustrate what my current loan balance is in comparison to my illustration. And keep in mind, this policy is 2 years old. So what you'll notice down here at the bottom, if you see current loan amount of $16,061.92. And the availability that I have in this policy in cash value right now is $29.24. So remember, this policy is 2 years old. Let's go to the guaranteed values. If you see the guaranteed values, this illustrates that I would have $15,953 available. However, I have loaned out more than that. So what that means to me is I'm going to go over here and check out the non-guaranteed side, because if I've loaned out $16,000, this is slightly more than what the guaranteed side was projecting. So let's bring a calculator into this mix so we can do a little bit of math. I'm going to add the guaranteed $15,953 plus the dividend projection from the first year, which is $134. And I get $16,087. So what does this confirm? This confirms that my dividend projection was actually paid for the first year. Now let's do a little bit of math to see what the difference is, because what I'm going to do is add my loan availability plus what is loaned out. So I have $29.24 plus $16,061.92. And that leaves me with $16,091.16. So we're about $4 off, but it's $4 in my favor. So it's important for us to share this information because of two things. The first thing is I've taken 2 loans out of this policy to the tune of $16,061. And now when I marry these numbers to the actual illustration that I was provided on the guaranteed and non-guaranteed side, you're able to see that the dividend was in fact paid out, and the numbers are super, super close to the illustration that was first provided to me. And one point that I want to make is in year 1, my dividend was $134. The dividends are always paid on the anniversary. So at the end of year 1, I was paid $134. Now, when the end of year number 2 rolls around, I am projected to receive a dividend of $247. This money has not been paid yet because, again, the dividend is paid on the anniversary. And I have several more months to go before I hit my anniversary. And keep in mind, dividends are not guaranteed. However, this particular company in which I hold my whole life insurance policy has been paying dividends for over 90 years consecutively. And to wrap this all up, again, we're just talking about the policy performance. We haven't even mentioned infinite banking, which is what are you doing with the loan to finance your lifestyle.
What we hope you realize in this video of us showing you Carmen's policy is the fact that even though Carmen had an outstanding loan, she still earned a dividend in the first year, and this did not affect her ability to borrow again in the second year.
I'm really glad that we were able to show this and demonstrate this with you all today, because it's really, really important that you understand the mechanics of the policy, because it's so easy to get really bogged down with the details and trying to figure out what happens. But the fact of the matter is, like Darius said, my dividend wasn't affected because we work with non-direct recognition companies. If you don't know what those kind of companies are, check out this video so that you can understand the details of those type of companies. And I still have the cash year in and year out. So that is the most important thing that you need to understand with whole life insurance policy mechanics, so that you can do infinite banking and use your loans to finance your lifestyle.
So if cash value life insurance is something that you're interested in, click on the link below to become our client.
And if you like this video, give us a thumbs up, subscribe to our YouTube channel, and share this information with family and friends.
Remember to own your own lifestyle,
or someone else will.